Mr. Weissman, Chartered Professional Accountant. Go ahead. The floor is yours, and welcome.
Thank you for inviting me to this session. I really appreciate the opportunity to express not just my views, but views of many tax people out there. I sit here and I was listening in the gallery before, and my head, I just keep shaking my head saying, wow, why are we here? Is this really necessary? I've practiced in tax, I hate to say it'll be 30 years next month, and I've never seen outrage and anxiety in not just the business community, but in the tax community as well, about items that, in my opinion, and you'll hear why, some of them are quite simple to address, but we have proposals that were released in the middle of July with a 75-day consultation period, and maybe can someone, I don't know if it's for today, but the website says that submissions are due no later than midnight Friday, the 29th, but we've been told submissions are due October 2nd, and yesterday at the Tax Foundation conference there was some inconsistency, so maybe we can get some clarity, because I don't have a submission for you today because of short notice, but I would like to get you one. But I think that we all need to take a step back. It's really important, because you can't fix, in my opinion, you can't fix solutions without knowing what the problems are, and no one can see the forest for the trees in this case. So I do think that the government, their policies, objectives with respect to income splitting, with respect to corporate deferral, are valid policy objectives. I think they're in line with the election platform that they ran on, and I think they are achievable objectives in a much, much simpler manner than proposed now. And I'll give you some suggestions. I'll sort of throw a lifeline out there and say, look, if we want to end this, if we want to sort of salvage what's going on now and actually move ahead with objectives and the economy and reducing uncertainty for businesses, here are some ideas. So again, I think the policy intent is fundamentally sound, in line with the election platform. I think the proposals, however, I know, they go way, way, way beyond that. And I'm speaking to you as someone in the trenches for 30 years dealing with tax legislation, tax changes. I started in tax when tax reform came around in '87. I've seen the capital gains exemption eliminated on capital gains on property. I've seen it restricted. I've seen kiddie tax brought in to deal with income splitting and income sprinkling, which is, I guess, a term that's now been coined. So I have ideas, and on those I'll talk now. And I do also, before I forget to get it out there are no ifs, ands, or buts. These rules, many of them, most of them, are absolutely retroactive. It's not true to tell the Canadian people that these rules are just going forward. As we've heard earlier, tax attributes of the shares that you own in your family business that were created 10 years ago because of transactions, last year, 20 years ago, they impact the calculation of the tax that will be calculated under these rules. So while it may say for transactions after July 18th, these rules are retroactive because there's no grandfathering, there's no transition, and it's like telling someone, you know what, you have your house, you've accumulated all that growth tax-free, you know what, we're changing the rules, your house is now going to be taxable. And it's not, but on the go forward, only if you sell it from now on. But if you sold it before we announced this, okay, you're fine. That's retroactive tax planning, and that's what some of these rules do to businesses. So what I'd like to say in the brief time that I have, I think that income splitting is a valid policy target. I think reasonability, I know that reasonability is not the way to go. Uncertainty and subjectivity in the tax code is a recipe for litigation, for costs, for unhappy taxpayers who don't have the funds to litigate. You cannot leave, you have to take judgment as much as possible out of the Income Tax Act. We need objectivity. So reasonability test on dividends, it just can't be determined. Reasonability on salary is hard enough, but at least there are ways to do a functional analysis. You can't do that with dividends. So I heard one example of extending the kiddie tax to age 24 as maybe a compromise of how to deal with curtailing income splitting. How about figuring out, okay, if someone spends more than X amount of hours per year in the business, the rules apply or won't apply. This kind of rule is actually used in the disability tax credit area, an area that I was involved in many years ago advising. With respect to life-sustaining therapy, we couldn't define what that meant, so the rule was put in, If you spend more than 14 hours a week on life-sustaining therapy, you're eligible for the DTC. So something like that could be used as opposed to a reasonability test. When it comes to corporate deferral, I just shake my head. Why are we talking about passive income and taxing passive income and adding, getting people up to 70% and penalizing people for earning passive income in a corporation? The reason is there's this corporate deferral because my corporate rate is lower than my personal rate. So this has been dealt with. I'm just shocked that we get these proposals about passive income. We have personal service business rules in the Act. So a long time ago, athletes, entertainers, they'd incorporate themselves. So a hockey player working for a hockey team would incorporate and say, you know what, pay my company, I'm going to get corporate rates instead of employment rates. So the government brought in the personal service business rules and say, if you don't employ more than 5 full-time employees, you don't get the small business rate. Got rid of the small business deduction for incorporated athletes. More recently, it was used for computer programmers and other professionals who incorporated to get access to the corporate rates. Computer programmers fall under the personal service business regime if they're incorporated, and there's now a surtax on personal service businesses. So that surtax brings the corporate rate up without increasing corporate rates on everyone, which I don't think is what the government wants to do. The surtax increases the effective rate, it reduces the deferral, and it can be targeted at the people I think the government is really trying to target, and I'm one of them. Right? I'm throwing myself on the sword here. If you want to stop people like me from incorporating just to get the benefits of a low corporate rate, stop me from doing it. Tell me if I incorporate, I'm going to have a surtax. But don't tell me that you need to affect all the family businesses all across Canada. So these proposals could stop there, because I think those are the government's policy objectives, but they go way beyond. The anti-surplus stripping rules, the 246.1, which we won't get into, they are just so rife with ambiguity and uncertainty, they're impossible to plan for. And finally, because I imagine I'm running out of time,
go ahead.
These rules, as proposed, will make a family decide to sell their business to an outsider instead of pass it on to the next generation. And there's no ifs, ands, or buts about that either. These rules say if you sell to a family member, you're going to be taxed at dividend rates of 45% if you sell to an outsider. So last thing, that's obviously not right. And last thing, who are you going to sell to? Private businesses are not going to be interested in buying new private businesses or existing private businesses because they're going to be looking to get out of the private business world with these rules. So who's going to buy? Public companies and foreign corporations are going to be buying up Canadian family businesses if these proposals go ahead as proposed. And my last comment, I really think a collaborative effort would go a long way to resolving these issues, because there are people in the profession like myself who are level-headed, understand the policy objectives, and have experience. And if we sat down in a room with finance and whoever the right people are, with the economists, I think we could hammer out proposals that would be acceptable to everyone in this room, and more importantly, to Canadians.
Thank you very much, Mr. Weissman. Just to